It is with great pleasure I turn this over to Mr. Brett Stuart with Global AgTrends. He's certainly a recognized leader in helping us understand the dynamics going on in the global market. And I'm always very interested to hear his perspective and his insight. So, Brett, I'll turn it over to you, and thank you for coming today.
Thank you, Norman. Appreciate that. It's good to be with everyone here today. A lot to talk about. I've titled this a 2021 Global Outlook, but what I'm going to start with is a 2020 review. And it's noteworthy to take a look here. You'll see on this next slide where we really landed the year in terms of exports. These are incredible numbers, right? Record pork exports. If we add in variety meats, we were $7.4 billion last year. Record tonnage, 7.3 billion pounds. That's up 15%. Pretty staggering. Total U.S. meat and poultry, if we combine everything, exports totaled over 18 billion, record high, record tonnage. 17.6 billion pounds of beef, pork, and poultry left the U.S. last year. Record U.S. meat and poultry exports to China. $2.7 billion of total meat and poultry exports went to China. Record tonnage, 2.8 billion pounds. Pretty incredible. Our ag exports, if you just look at total U.S. agriculture exports, we reached a 6-year high, almost record high at 146 billion. And while a lot of the media and the press has been around the phase one deal has said, well, the phase one deal failed to meet those purchase commitments, which is true. China didn't purchase 36.5 billion, but it did set a new record for U.S. ag exports to China, 26.4 billion. And then you can see there, U.S. pork to China totaled 2.1 billion pounds, up 104% from the prior year. These volumes are up over 6-fold from the 2018 levels. And so you can see how quickly this situation came unwound. After ASF was found in China in 2018, it led to massive culling in 2019, and 2020, it's off to the races. China accounted for 28% of our pork exports last year. So that's just kind of a snapshot of where we ended the year. It was absolutely an unprecedented year based on the massive shortfall of pork in China. But we also had success in other markets as well. It wasn't just China, and I'll talk about that in just a minute. So the next slide here, I wanted to just show you where we landed in December. We got that December data. You can see U.S. pork exports, and if you click right here, you can see a similarity between these two charts. So on the left, that's just total pork exports in tonnage. On the right, it's broke out by country. And you can see pretty clearly what happened last winter and spring a year ago. We saw that huge buying pattern by China. They bought over 100,000 tons of U.S. pork for 2 months back in April and May. Also, if you look just at the last 4 bars on the right, you can see that increasing, and look over on the chart on the right, Mexico and China both stepping in big volume. So the Mexico bubble is not burst, even though we're not at those extreme levels. Look back to 2018 when we used to send 15, 20,000 tons a month to China. We're sending close to 80,000 tons now. And so the China demand's not yet over. This next slide, you can see where I'm looking for 2021. There's our pork export forecast. We had exports up 15% in 2020. We've got total pork exports forecast for a 2% decline in 2021. And it's a little disappointing to forecast a negative number, but what that means is we're going to hold 13% of the prior year's growth. And a 2% decline is not too bad. You look at that chart, you can see the red line China there, how quickly that went up. I've got China down about 17%. And I forecast that on a monthly basis. And really what I've done, I've just taken out that spring bubble that we had a year ago. That big bump we had over the spring. If I take that out and say, we're going to roughly run steady with those levels, that ends up with China buying about 6% of production in 2021. A couple things to think about. So I've got, you can see there, Mexico higher, Japan higher, As China stepped in and bought aggressively on the global pork markets, we saw success in a secondary way in other markets. We were the only supplier that showed up in Japan's customs data as increasing imports into Japan in 2020. European suppliers dropped significantly in Japan. If I look at our market share report, we put out a monthly world pork import report at the end of the month, and our market share grew in every key market we have last year. We increased market share in Japan, in Mexico, Canada, Korea, Australia. I'm not sure about Colombia, China, but all of those the top 6, 7 markets all saw an increase of US market share. And that's because China was pulling very hard on all the world supplies, not just on US supplies. And so it's great to see something like in Japan, one of our most lucrative, profitable markets, see a gain in US market share as well. So as we look into 2021, a few things to think about. We're headed for a COVID recovery. Believe it or not, right? The vaccine is rolling out. I read an article this week that said by May 1st, the US is going to be swimming in vaccine. The vaccinations are rolling out. We're already seeing the case counts drop significantly. The death counts are still a little bit stable, but they lag. And so fast forward a month with the high risk population vaccinated, we should see the death counts drop significantly. Hopefully we can see a change in restrictions, government restrictions, restaurants open, travel begin to resume. We should have a bit of pent-up demand in 2021 here due to the COVID recovery. The IMF is projecting a 5.5% global GDP growth for 2021. That's a sharp increase from the average, and a lot of it's just correction for what was lost last year. But that should fuel global demand for protein. There's continued ASF restrictions for Germany. Germany continues to find wild boars with African swine fever. Yeah, that benefits us to some degree. Germany was a big player in Korea with bellies. We don't really send bellies to Korea, but it does tighten the global markets. And before we rejoice too much at Germany's misfortune, just remember, ASF is constantly on the move. It could end up anywhere at any time. And so we continue to face the risk of ASF even in North America. So if you're sleeping easy at night, there's something to keep you awake. We're heading for a weaker US dollar. I'll talk about that in a minute as well. And commodities are broadly shifting higher. So next slide. It all revolves around China, not just 2020, but also 2021. Here's a chart of Chinese live hog prices. This is in RMB per kilo, and a shot at what they're looking at in 2021 fall out into next year. And you can see there, those prices remain incredibly high. Last Friday, the China price was 31 RMB. And now we're kind of going dark because of Chinese New Year. We're not going to have prices probably for a week. But 31 RMB per kilo on a Chinese live hog is the equivalent of about $2.85 on a US carcass weight hog. So it's like a 285 carcass market in China today. Prices are incredibly high. If you look at that chart, before ASF, back in 2018, common prices were 10 to 15 RMB. Once in a while, they'd hit 18 RMB. They're at 31 today. And they've been this high now. You can see they're going clear back into September of 2019. So we're going on 16, 17 months of incredibly high prices. The Chinese hog margins have averaged over $330 a head for 16 months. And in case you're wondering if I said that right, $330 a head. Now, a per head profit isn't the same as a per pen profit. And when you have ASF and a variety of other diseases, it's probably not as great as it sounds. But still, if we had profits anywhere even remotely close to that, we would have the market fixed definitely within 10 to 12 months. China's now going on 16, 17 months. And so obviously there are some challenges. You've heard news about variant ASF strains in China. We believe those are true, possibly caused by unregulated vaccines. And so there continues to be some real problems in China's recovery. This is absolutely critical as we think about forecasts into 2021. what's happening in China. My key assumption is that we're going to see these hog prices right here above 26 RMB through the end of the year. So I'm a little above the China hog futures. I don't have a lot of confidence in this new hog futures market in China. They came out first week of January. Those prices have hardly moved, barely at all. Open interest, it's up over 20,000 now in September, but the open interest is about where it was 3-4 weeks ago. And so I don't know what's going on there. I would suspect that there might be some government-supported entities that were stimulated to get this market started, but the market's not really moving, the hog futures market. I'm betting that the market, these hog futures are a little too low. I think this China ASF recovery is having some real problems, and I think it's going to take longer than expected. Next slide. Here you can see what happened with ASF. So 2018, China imports 9 billion in meat and poultry. 2020, we go up to 28 billion. And so the question becomes, if and when China recovers from ASF, who's going to absorb an extra $18 billion in global protein? And a rapid recovery would make all of our heads spin. And so this is staggering. That is an enormous amount of global protein trade that were China to overproduce, crash their markets, not need imports. It would affect their beef, it would affect their poultry, and obviously their pork. Now, I'm somewhat of a believer here in more of a soft landing. I look at what's going on with China, not just with their swine herd recovery, the road bumps there, but also their increasing wealth. I saw a statement the other day out of a study. It said in 2019, China had 19 million households with an annual income over 35,000 US. 19 million Chinese households with an average income over 35,000. That number of households is expected to double by 2023. Now, who knows in these kind of forecasts, right? But to assume that they're going to increase 20 million households to an income level of 35,000 US is pretty staggering. The average income level in China is closer to 8,000 to 10,000 a year. And so the growth in incomes is shifting diets, shifting preferences. China's economy is on track to do very well right now. They didn't have much slowdown last year outside of the Wuhan incident last spring. They have COVID mostly under control through government scanning of citizens everywhere you go and reporting on their phone apps. And so away we go. Again, I think this is going to be a softer landing. I don't know if China ever truly recovers to the pre-ASF level. They've developed an infrastructure now around imported meat. They found how affordable imported meat is, and they may recover and they will recover beyond where they are today, but I don't know if they ever truly recover. So where did this come from? I mentioned the fear, right? Where do we stick an extra $18 billion of protein? The next slide here, you can see where that came from. This is China meat and poultry imports in $1 billion by nation. So they increased over 2 years. They got 7 billion more protein out of the EU, 5 billion out of Brazil, 3 billion out of the US. And you can see the baseline the US was at. That's a lot of protein. I don't think we could react quickly enough for this to stop suddenly. Again, I don't think it's going to stop suddenly. I think 2021 is going to provide strong Chinese demand for all proteins right through the end of the year. We'll have to readjust and see where we stand here towards the end of the year, looking into 2022. Another major change in the next chart you'll see is the declining dollar. This chart shows changes of these currencies against the dollar baseline back to January 1, 2018. So when you see these lines rising, they're appreciating against the dollar, meaning the dollar is weakening. And you can see that circled area right there. This really began when? Right about the time the US started stimulating the economy over COVID. This is affected by huge borrowing rates by the US. It's affected by stimulus. You cannot print money without devaluing your currency. Argentina can tell us that. And so as we continue to see potential for this new stimulus package to go through, we can expect a weaker US dollar. A weaker US dollar usually buoys commodities. It raises the price of commodities and it increases demand from overseas buyers. As our currency weakens, our commodities are cheaper in the global markets. And so that would suggest stronger demand for overseas buyers of US commodities, not just pork, everything. Next slide. Global grain pain. You're all very well aware of what's going on with the corn prices in the US. Take a look at China. Last week, they were feeding $11.76 corn. They were making, their margin last week fell to $265 a head on hogs. A month ago, they were at $330. So it's trimmed some profit off in China, but it's staggering to see how fast that line has gone up. And think about it, if markets go up to ration usage, prices go up to ration a scarce commodity, right? That's how markets work. When Chinese hog farmers are making over $300 a head, who's going to get rationed here? And you can click and see this text box right here, some of the things going on. I mentioned they've averaged over $300 a head since 2019. So if corn does get tight, if China needs more corn and their margins are $265 a head, they're going to buy more corn. Well, price is not an issue at this point. It would have to be way, way, way higher to become a hindrance for China. And so I guess what I'm trying to say here is, who's going to ration corn? If you look and say who's most vulnerable based on prices, it would maybe be the poultry sector, maybe ethanol. We'll see where energy prices go this year. But also hog farmers and cattle feeders are vulnerable to these kind of price shocks. Next slide. This is just a tweet we put out when we saw that big buy a couple of weeks ago. China stepped out and bought 6 million tons of US corn in a week and said they were going to buy another 2 million. So we add it all together today where we're at. China's committed to roughly 17 million tons of US corn, and we've got a lot of crop year left to go. Some estimates suggest 30 million tons. That's probably a good guess because our estimate is that when China banned swill feeding, garbage feeding of hogs, that it took roughly 30 million tons of feed out of the Chinese balance sheet. So think about that. You can decimate the swine herd, they can rebuild the hog herd. You take 30 million tons of food waste out of the equation, that's 6 million acres of US yield corn. And so where do you go replace 30 million tons on the global balance sheet? Somebody's got to give some up somewhere, and that's what the markets are doing today. They're trying to find that corn. All right, next slide. As I mentioned, we're seeing commodities broadly rise. This is the FAO Global Food Index. You can see there what's going on. The blue line is oils. That's not crude oils. That is food oils. That's palm oil, soy oil, those kind of things. But if you sharpen in on the right hand of that graph, you can see what's going on. We're headed the same direction we were headed back into 2006 and 7, again in 2010 and 11. And based on what's going on with the US dollar, what's going on with stimulus, with money printing, what's going on with global demand across the spectrum, and China potentially taking 30 million tons of feed off their balance sheet, I think we're headed for another commodity super cycle. I don't know how far and high this is going to run, but it sure feels inflationary at this point. Okay, next slide. With that, I'm going to wrap it up here. I would just suggest that the tailwinds are blowing for US pork exports into 2021. Now, China, keep in mind, we still have 25% retaliation tariffs that are tied to the steel price. Steel prices right now in the US, hot coil rolled steel is up 100% in price from a year ago. Is there a chance the Biden administration is willing to consider lifting steel tariffs on China? If so, that 25% tariff on US pork could come off, or it could come off through other negotiations. But we have a weakening dollar, we have this overall commodity inflation. What are the risks? Rising grain prices. They could rise faster and higher than we think. Drought, we have a very strong La Nina pattern in the Pacific Ocean right now. It is not weakening over the last month. That would portend to drought in the US. We already have a drought in the Western US. It's creeping somewhat to the Midwest. That's a risk. I don't know if the drought happens, but the risk is rising. Global African swine fever, the virus can show up anywhere, anytime. Europe is continuing to battle major concerns in Western Europe due to the German cases. And the risk of politics, that's always out there. Trade's a messy business. China is now driving up the global food prices. We went through those numbers. Someday they will recover, but I think that day will not be in 2021 and probably not even in 2022. The problem is right now, for all of us sitting here, is China is now driving the global markets for corn, soybeans, pork, beef, poultry, you name it. China is our global commodity driver. This is a country that is not transparent. There's no USDA data equivalent. I have been constrained to not be able to travel there the last year. 2019, I was in China 3 times as we watched and tried to scour to figure out what's happening with the decimation of the China swine herd. We were able to get some very good information by being in China. I can't do that today. This is a tough situation. Markets are somewhat flying blind here as we are hitched to the China wagon with our markets going forward into 2021. And so staying plugged in on China becomes the most important factor for now. Feel free to jump on our website for info. It's globalagritrends.com. Thank you, and I will go ahead and turn it over to Dr. Clay Eastwood.
Hey, Brett, before we turn over, one quick question.
Sure.
The April-May spike in exports in any way related to the surpluses in U.S. wholesale cuts due to the dramatic shift in retail and restaurant sales. So did exports end up appreciating because there was excess meat here?
If you look at the trade data and you figure the lagging, so we've got 3 weeks to get it across the ocean. The Chinese buying was taking place in February and March, really before we saw that surplus shortage roller coaster last summer. I don't think that drove it. I think it was a very high time, very high prices for China. Those purchases were made way out in front. They just took some really big positions. But we did definitely ride a roller coaster as we got into summer, even on trade, based on that disruption to the supply.
Thank you.